Have you ever wondered how your credit score really works, or how it can affect your financial future? Credit scores play a crucial role in many aspects of our lives, whether it's buying a home, securing a loan, or even getting a job. But despite their importance, many people still don't fully understand what goes into calculating these scores and how they can impact us. In today's video, we'll break down everything you need to know about credit scores, demystifying the process and helping you take control of your financial health. Let's dive in. What is a credit score? A credit score is essentially a numerical representation of your creditworthiness. Lenders use it as a way to evaluate your ability to repay debts, and it acts as a predictor of future financial behavior. Ranging from 300 to 850, a higher score signifies a lower risk for lenders, while a lower score suggests that you might be more likely to default on your payments. In simple terms, your credit score is like your financial reputation. It affects your ability to obtain credit, secure loans, and even impacts the interest rates you'll be offered. The score is generated by credit bureaus, Equifax, Experian, and TransUnion, which collect data from various financial institutions and creditors. The credit score is not arbitrary. It's based on your credit history, which can include things like your track record with paying bills, the types of credit you use, and how long you've been using it. The score itself becomes a shorthand for lenders, helping them quickly assess whether lending you money is a safe bet. Importance of credit scores. Credit scores are essential in shaping your financial future. When you apply for a loan, whether it's for a mortgage, car, or personal loan, your credit score is one of the first things a lender will examine. A good credit score opens doors to better interest rates, which can save you significant amounts of money over time. The better your credit score, the more favorable the terms you're likely to receive. On the other hand, a low credit score can be a serious financial obstacle. It could result in higher interest rates, meaning you'll pay more in the long run for the same loan. It might also limit your access to credit entirely, as lenders may view you as too risky. But the consequences of a low credit score go beyond loans. Potential landlords might check your credit report when you apply to rent a property, and employers in some industries may do the same before making a hiring decision. Your credit score can even affect the rates you pay for car insurance, making it a pivotal number in more areas of your life than you might realize. Components of your credit score. Understanding what goes into the calculation of your credit score is essential if you want to improve it. Your credit score is calculated using 5 main factors: payment history, credit utilization, length of credit history, credit mix, and new credit. These factors are not weighted equally. The largest factor, making up 35% of your score, is your payment history. This is a record of whether you have paid your bills on time, and it can include information about late payments, bankruptcies, or collections. The second largest factor is your credit utilization ratio, which makes up 30% of your score. Credit utilization refers to how much of your available credit you're using. A lower ratio is generally better for your score. For example, if you have a credit card with a $10,000 limit and you owe $4,000, your credit utilization is 40%. Keeping this ratio below 30% is considered ideal because it suggests that you are not overly reliant on credit. The length of your credit history accounts for 15% of your score. Lenders prefer to see that you have experience managing credit responsibly over a longer period. New credit makes up 10%, which refers to how many recent inquiries have been made into your credit report. If you apply for several lines of credit in a short period, it can suggest that you are in financial distress, which could negatively impact your score. Lastly, your credit mix, representing 10% of your score, refers to the different types of credit accounts you have, such as credit cards, mortgages, and installment loans. A healthy mix shows that you can manage various types of credit. How credit scores are calculated. The calculation of credit scores is based on proprietary models like FICO and VantageScore, though both use similar criteria to evaluate your creditworthiness. These models don't just look at raw numbers. They analyze how you've used credit over time. For example, FICO considers your credit history as a reflection of your financial habits. If you've made late payments or have a high amount of debt relative to your credit limit, your score will reflect that. Your score might fluctuate between different credit reporting agencies because each one has slightly different data sources. However, most lenders will use FICO scores, and this tends to be the model that most individuals are familiar with. In general, a score between 300 and 579 is considered poor. A score between 580 and 669 is fair, 670 to 739 is good, and a score of 740 and above is excellent. If your score falls in the lower ranges, you'll likely face higher interest rates, while higher scores give you access to more favorable financial products. The different types of credit scores. While FICO and VantageScore are the two most commonly used credit score models, there are variations within each. FICO scores, for instance, come in different versions, which are tailored for specific industries or types of lending. The most widely used version is FICO Score 8, but there are also FICO scores designed specifically for auto loans, mortgages, and credit cards. Understanding which score is being used in a particular context can help you better prepare when applying for loans or credit. VantageScore is another model that's gaining popularity. It works similarly to FICO, but uses a slightly different scoring method. One of the key differences is that VantageScore uses a broader range of data to determine your score. For example, VantageScore may take into account rental payment history, which FICO typically doesn't include in its calculations. However, most lenders still prefer FICO scores because they have been around longer and are more universally recognized. Regardless of the model, it's important to keep track of your score across all agencies to ensure that you are staying financially healthy. How to improve your credit score? Improving your credit score takes time, but it's possible with the right strategies. The most important step is paying your bills on time. Even one late payment can have a significant negative impact on your score, so setting up reminders or automating your payments can help you stay on track. Another crucial factor is reducing your credit utilization. If you can pay down some of your credit card balances, you'll lower your credit utilization ratio, which will likely lead to an increase in your score. If you're unable to pay off the full balance, try to keep it under 30% of your credit limit. Additionally, review your credit report regularly. You're entitled to one free credit report per year from each of the 3 major credit bureaus. Dispute any inaccuracies you find, as errors can hurt your score. You should also avoid opening new credit accounts too frequently. Each inquiry into your credit report can cause a small drop in your score. Keeping your accounts open, especially older ones, is another way to improve your score over time. It shows lenders that you have a long history of managing credit responsibly. Credit scores may seem like a mystery, but once you understand the factors that influence them, you can take steps to improve your score and secure a brighter financial future. Whether you're looking to get a loan, rent an apartment, or simply improve your financial standing, keeping a close eye on your credit score is essential. Thanks for tuning in. By taking control of your credit, you're investing in a future of financial stability and opportunities. Don't forget to like, subscribe, and comment below with your thoughts. See you in the next video.